mean by this bank or banking, correct? So in the tradition method of banking is nothing but the all the institution. Hi, welcome to this video on investment banking. So you already known what you mean by this bank or banking, correct? So in the tradition method of banking is nothing but the all the institution or all the banker accepting deposits from the public and lending money to the public, correct? So and they are doing some primary and secondary roles or secondary activities in the organization. So what do you mean by this investment banking? Okay, so what are the main or roles or main or major roles of investment banking that we will see? Okay, so first look at the agenda. So in this course, first we are going to discuss about introduction about investment banking. Okay, so second one, meaning and definition of investment banking. So what you mean by investment banking in general terms and what is the definition of investment banking that we will see. Next, functions of investment banking. So what are the major roles or major functions of investment banking that we will see? Types of investment banking. So what are the major types are there in the investment bank that we will see? Next, trade cycle of investment banking. What is the process or what is the step-by-step activities they are going to taken care in the investment banking that we will see. Next, merchant banking. So, what do you mean by this merchant banking? We know what you mean by merchant or what you mean by banking. Then what is mean by this merchant banking? That we will see. Next, services of merchant banking. So, what are the services they are going to given in this merchant banker or provided by the merchant banker? That we will see. And the last one, what is the difference between this investment banking and the merchant banking? That we will see at the end. Next, we will start with the introduction to investment banking. So we'll have the brief introduction about investment banking. Okay. So what do you mean by this investment banking? The word or the terminology only indicates that investment banking. Correct? There are two words. So investment, you know what do you mean by that investment? Okay. If whoever the having the money, they are going to invest their money in some other activity or in some other avenue, portfolio, or in the assets. Okay, so investment means investing money or putting money in some other avenues. That is called investment in general terms. What do you mean by banking? Banking, they have the expertise. Okay, so with that expertise team, they are going to take care of these investment activities. That is the general meaning of investment banking. So we'll see. First, that is investment banking helps companies and governments and their agencies to raise money by issuing and selling securities in the primary market. Okay. So first, what do you mean by this primary market? Okay. In the primary market, only the fresh issue or new issue of shares will be traded in the primary market. We have one more type of market, that is secondary market. So in this secondary market, only which are all the existing shares and securities. Okay, it is already available in the market. That shares and securities they are going to trade in the secondary market. So primary market only for new issue, secondary only for existing shares. Okay, so these are the two different types of markets we have. Okay, so in this investment banking, they are going to help all the companies, whether it may be a private company, public company, or corporation, cooperative society, any other companies. Okay, they are going to help, and for governments also, it going to help to raise the long-term finance. Okay, they are not going to raise the short term funds through this investment banking. Okay, they are going to use this investment banking and they are going to raise the long term capital or long term funds for their organization or for their business activities. They are going to raise the money. So that is the investment banking. Next, they assist both private and public corporations in raising funds in the capital markets, that is equity and debenture. So we know which are all the securities they are going to trade in the market, correct? So mainly this equity shares and the debentures are the main sources of funds for the all the organizations. So equity holders or equity shareholders will be the real owners for the organization, and for debenture holders, they are the outsiders or they are the third parties for the organization. This both, if you are investing your money on equity share or if you are going to invest your money on debenture, okay, but you are going to invest your money, but equity shareholders are the real owners for the organization and they have some voting rights. Okay, that is a special feature they have. And for debenture, yes, whatever the fixed interest rate is there, they are going to get the interest rate for every year. And they don't have any voting rights or they are not going to participate in any activities of the organization. Just they are going to take the interest and they are going to take whatever the maturity period is there. On that time, they are going to take the complete their principal amount from the organization. So here in this investment banking, they are going to help all the public and private corporations or private companies, okay, to raise the equity and debt fund in the primary market. SBI was the first Indian public sector bank to set up its investment banking division in 1972. So in the first time, the State Bank of India is introduced this investment banking in India in 1972. Okay, so first branch is opened on 1972 under the SBI. SBI caps and IDBI caps are the two prime example of IB, that is your investment banking. So these two are the best examples of your investment banking. Next, meaning and definition of investment banking. So we have known what are the introduction or brief introduction about the investment banking and when it is started in India or who is the starter or which bank is introduced this investment banking, that we have already discussed, correct? So next, what is the meaning of this investment banking? So an investment bank is a financial institution that assists individual, corporations and government in raising finance by underwriting and act as the client's agent in the issuance of securities or both. So this investment banking is a financial institution. Okay, they are going to deal with the all the funds and they are going to assist their clients. Okay, as an individual, I am also be a client for the investment banking or the companies also become a client for the organization or for this investment banking. Okay, so companies, corporations, governments, for all these institutions, they are going to help to raise the finance to get the long-term funds for their organizational activities. And for that companies, they are going to act as a underwriters. Okay, underwriters means this agency they are going to assure that 100% issue of all the securities or all the shares. If for example 100 shares the company is issuing means they are ensure that all the 100 shares were subscribed or it is sold in the market. Okay, if for example only 50 shares were sold in the market, remaining 50 shares are unsold. Okay, so on that time this investment banking act as an underwriter and this investment banking only or investment banker only they are going to purchase that remaining 50 shares at a discounted price. They are not going to purchase for the whatever the market price is there. Okay, they are not going to purchase for the market price. They are going to purchase for the discounted price. And whenever they have the market for these shares, they are going to sell in the market. But investment banker is assured that 100% the shares were subscribed in the market. Okay, and it is act as a client's agent. Okay, if for example the company is involving a number of activities, correct, so on that time they don't have the time to involve in this raising of funds, or they don't have the expertise to raise the funds, so on that time they are going to give this all the activities to the investment banker, act as a client's agent. So on behalf of his client, they are going to take care of all these activities. Next, an investment bank may also assist companies involved in merger and acquisition and provide ancillary service such as trading of derivatives and equity securities, FICC, that is fixed income clearing corporation services. So this investment banker not only helping or not only assist for their clients for this raising the funds, they are going to assist for the mergers and acquisition activities also. If the company wants to merge with the other company, or the company wants to acquire weaker company, so on that time this investment banker will act as a intermediary for this all these activities. And not only in the equity share, they are going to help or they are going to assist in the derivatives markets and other securities also. Example for this investment banker are State Bank of India, Citibank, Kotak Mahindra Bank, Bank of America, and JP Morgan banks, etc. So these are the few example for investment banking. Next, functions of investment banking. So after the meaning and definition, we'll see what are the functions or what are the major roles played by the investment banking. Okay. So first one, IPOs. I think so. Everyone are known with this word IPO. Correct? That is initial public offerings. What do you mean by this initial public offering? So initial public offering is nothing but the first time, okay, the company is going to issue shares in the primary market. Okay, so the word only indicates initial public offerings. So initially, that is first time, the company is going to offer the shares for the public. So if you want to go for this IPOs means we have n number of activities are there. That is n number of procedures are there. Okay. So for example, first if they want to issue shares means they need to take the permission or authorization from the SEBI. Okay. And how much the repayment capacity of the organization is there. And what is the net worth of the organization and past, okay, financial records. Okay, all these information they need to give, and then they need to take the permission for this issuing the shares. Okay, after that if you want to sell in the primary market, okay, whatever the procedures are there they need to complete. Okay, for that they require time. Okay, so if they want to know how much is the credit repayment capacity, okay, then they need to take the credit rating agency's help. Okay, for that they need to apply for credit rating agency of that institution, and then they are going to get the whatever the symbols or whatever the ratings of that organization for that particular instrument they are going to get. So after that they need to whatever the electronic form or hard copy, okay, paper, that shares they need to print, and they need to distribute, and they need to collect the money for other activities will be involved in this IPO. So on behalf of the companies, okay, this investment banking will do all these IPO activities, and they are going to take the commission or fixed percentage of amount they are going to take as a fees from the is clients or from the organization, whichever the organization is issuing the shares, from that organization they are going to take the money. So that is the first function of this investment banking, that is IPO, initial public offerings. So next, second one, investment management. Okay, this IPO for organization, whether it may be a private company, public company, government, or any corporation, they are going to help for this IPO. for whom they are going to help as a or act as a investment management. For whom they are going to do this function means all individuals. For example, I, you, or whatever the assessee individuals are there. Okay, so I have the money and I don't know how to invest money or in which security or in which avenue I need to invest my money. I am not sure. Okay, I really having the zero knowledge about the investment avenues. So on that time, what I'm going to do, I'm going to approach this investment banker. Okay, and whatever the money or whatever the amount I am ready to invest, okay, that I'm going to inform for the banker. So on that time, banker will help or they are going to give these advisory functions and they are going to do this all the activities on behalf of myself. They are going to invest my money and they are going to cut some percentage of commission and they are going to pay the return to my account or they are going to deposit return to my account. Okay, on behalf of myself, all the activities or all the taking care of that investment and managing investment activities on behalf of myself, the company or the financial institution or this investment banker will do. Next, that is third one, boutiques. Okay, that is also called as creative boutiques. Okay, these are the agencies. Okay, whatever the small amount of investment the individual is ready to invest small amount of investment in any security. So on that time, this creative boutiques will come to the picture. So a boutiques is a small financial firm that provides specialized services for a particular segment of the market. Boutique firms are most common in the investment management or investment banking industries. So these are the small financial institution. Okay, they are going to deal with very small amount. Okay, so for example, if I'm ready to invest only 10,000 rupees, I have only 10,000, so I'm ready to invest 10,000. So on that time, okay, this boutiques or creative boutiques will help that investors for their investing activities. Okay, only they are going to deal with the small amounts and specialized in that activities or that in the investment activities they are very specialized or expertise will be there. They are going to taking care of this all these activities. Next function, mergers and acquisition. We are known or we are heard this word or reading in the newspaper so many times, mergers acquisition. Okay, so what do you mean by this meaning of mergers and acquisition? First, we'll see the meaning of mergers and acquisition. So, merger is nothing but it is a legal consolidation of two companies and forming a new company is called mergers. If, for example, A and B company will be there. So, this legally A and B company they are going to merge and they are going to start as a ABC company or whatever the existing name is there, A company or B company or AB company. Like that, they are going to start with the new company. Okay, in a simple word, merging of two companies and starting a new entity in the market. So that is mergers. And what do you mean by this acquisition? Okay, so acquisition is nothing but the financially strong company is going to acquire the financial weak companies. Okay, or financial sick company they are going to acquire, or small companies, the big companies they are going to acquire the small companies. So it may be same products and services or different products and services, but they are going to do this acquisition. Mergers is nothing but merging of two companies. Acquisition is nothing but one company is going to acquiring the other company or small companies they are going to acquire. For that, how this investment banking will help? Okay, so for this mergers also or for this acquisition also, we have n number of process or n number of steps are there. Okay, so first they need to approach the company, they need to take the decision or they need to collective decision from all the stakeholders or the shareholders. Okay, and for other company is ready to acquire with this company or ready to merge with this company, that they need to check. And if it is ready to merge with that company or acquire with that company, they need to do this all the accounts, okay, whatever the balance sheet or others are there, they need to start with the revised or revised balance sheet they need to prepare. So what is the realized value of all the assets and liabilities that they need to check, correct? So for all these activities, this investment banker will help the organization to do the for this doing the mergers and acquisition. Next function, structuring of derivatives. What do you mean by derivative? Derivative is nothing but the value of one asset or one security is derived from the other. So the depending on the assets, the underlying assets are there. On that value, these derivatives will be depending. So structuring of derivatives is nothing but constructing or forming the derivatives to the shareholders that it minimize the risk and maximize the profit. Okay. So for example, you have heard the word capital structure, correct? So in the organization, they are not going to invest their own money. They are going to borrow money from the banker. They are going to issue shares and they are going to collect the money or issue preference share or debenture, any other things. Okay. They are going to collect all the money and then they are going to run their organization, correct? Like that, structuring derivatives is nothing but mixing of or combination of all the available sources or all the available avenues they are going to combine and then they are going to do this structuring. That is, they need to minimize the risk and they need to maximize the returns on their investment. Okay, that is the main objective or hidden objective of this structuring derivatives. Okay, minimize the risk and maximize the profits. If for example I have the 10,000, if I investment or if I invest complete 10,000 in one security means it may be okay, whatever the due to the market condition, the price it may be go up or it may be come down also. So on that time, what they are going to do, whatever 10,000 I'm ready to invest, in that 10,000 they are going to invest 5,000 rupees in the equity share, 3,000 in the debenture, and 2,000 in the preference share. Like that combination they are going to do and they are going to invest. Next, merchant banking. So merchant banking is also one of the function of the investment banking. So making arrangements of selling, buying or subscribing to the securities, consulting, advisor or one rendering corporate advisory service in the relation to such activities to the management. So this merchant banker will act as a purchase the securities or selling the securities or consultation. Okay. If for example, if anyone require the consultation, so this merchant banker will consult the clients or advisory functions. Okay, whatever the activities are there, for that they are going to do the advisory functions or any other related to this market or investment management. Okay, they are going to do as a or then act as a merchant banker. Next, research. So what do you mean by this research? Okay, the forecasting and evaluation of financial risk together with the identification of procedures to avoid the or minimize their impact. So research is nothing but on the particular topic they need to do some research activity or in-depth investigation of one topic, that is called research, correct? So why they are going to do this research means they need to minimize the risk. Okay, if for example if I want to invest on equity share, how much risk is involved, okay, that they need to get to know, correct? So how they are going to get to know the or they are going to know the how much risk is involved in this particular security, they need to research or they need to do the investigation or in-depth investigation they need to do on that particular shares. Then only they will get to know how much risk is involved in that organization securities or in that company's shares. Okay, so for that research is required. So if I want to individual, as an individual, if I want to do the research, yes, for that huge money is required. So what I'm going to do, I'm not going to do the research. Or the companies, okay, companies also they need to do this research, on that they need to spend huge money. So on behalf of we are directly involved in this research activity, what we are going to do, we are going to give that research activity to the investment banking. So this investment banking will do the research and whatever the report, okay, that they are going to submit for their clients. Next, risk management. Okay, all these above functions, okay, it may be a mergers and acquisitions, structuring of derivatives, merchant banking, research, okay, investment management, IPO. Why they are going to do all this function means, okay, to minimize the risk or managing the risk in the all the securities. Okay, if I want to invest my money in any securities or in any shares means, I need to first look at the how much risk is involved and what is the safety, that is how much I can get back the money, and the liquidity. These three things I'm going to look into. Okay, so this risk management is also very, very important in the investment activities. So involves analyzing the market and credit risk that traders are talking onto the balance sheet in conducting their daily trades. Okay, how much is their, okay, daily turnover or monthly turnover or yearly turnover, and what is the total net worth of the organization. For all these activities they are going to check, and then they are going to do this risk management for the securities. So next, types of investment banking. So what are the different types of investment banking? Okay, so we have five different types of investment bankings are there. Okay, first one, based on the function. Second one, private or boutique investment banking, full service investment banks, brokerage firm, commercial banks. So these are the five types of investment banks are there. So we'll see one by one. First one, based on function. Based on function, we have in this two categories are there. That is one, sell side, and another from buy side. Okay, so this investment banking based on the functions, whatever it may be, buy side or it is maybe sell side, they are going to work. So what do you mean by sell side? Sell side investment banking is nothing but whichever the company is issuing or whichever the institution or corporations or any other government, they are selling their securities or shares or bonds. Okay, so on that time, this investment banker will act as a sell side. Who is the seller? Okay, for them, they are going to act as a sell side investment banking. Okay, on behalf of the organization, all the securities will be sold by the investment banking. Next one, buy side investment banking. So buy side investment banking is nothing but like we all. Okay, if we are ready to invest my money or in ready to invest our money in that particular security means, so on that time we need to invest on the any securities, but we don't know on which security we need to invest. So on that time, this investment banking or buy side investment banking will act on behalf of us, and then they are going to purchase the securities from the market. So which security is going to give more yield or which security is having the very good growth rate, return on their investment and liquidity, other things they are going to check, or whatever the parameters are there, they are going to check, and then they are going to invest our money in that particular securities, or they are going to purchase or they are going to buy that security on behalf of us. That is the buy side. So sell side, only who is going to sell the securities or issuing the securities, on behalf of them they are going to act. Buy side investment banking will act only on behalf of the buyers of the securities. Next, private or boutique investment banking. So this private or boutique investment banking are the small financial agencies. So there, what they are going to do, they are going to deal with very small amount. If, for example, companies, if they want to issue equity shares or any preference share, debenture, bonds means they will issue in lakhs and crores, okay, in terms of money. But this private or boutique investment banking, they are not going to deal with that large amount. Only if it is in a lakhs or in a thousands, okay, they are going to act as the client's agents as the private boutique investment banker. Okay, if for example, I am ready to invest only 15,000 rupees. Okay, on which I need to invest, I don't know. So on that time, these private boutiques or boutique investment bankings will help me or help their clients to invest their money. Next, full service investment banks. So full service investment banks is nothing but whatever the functions are there or whatever the functions is there in the investment banking. Okay, all the functions will be done by this full service investment banks. It may be initial public offering, it may be investment management, boutiques, or mergers and acquisition. Okay, any other. Okay, risk management or research, all the other functions will be done in this full service investment banks. Next, brokerage firm. Okay, brokerage firm is nothing but this firm or these financial institutions, they are going to act only for the commission or brokerage. If for example, I have 10 equity shares of XYZ company and I don't know how to sell or at what time or at what level I need to sell that shares, I don't know. So on that time, I will go and take the help of this brokerage firm. So this brokerage firm, what they are going to do, whatever the you are purchased the price, okay, purchasing price, and what is the profit you are going to make, or what is the price they are going to sell that securities in the market. Okay, the difference is the profit, correct? Purchase price minus selling price. If it is a positive, it is a profit. If it is negative, it is a loss. No one is ready to sell at a loss. No one is ready to sell at loss, correct? So everyone are looking for the profits only. So whatever the amount they are going to sell, okay, on that selling amount, they are going to take the commission or brokerage. They are not going to take on the only on the profit. It is wrong. Not only profit, what is the selling price? If it is for 1 lakh rupees they have sold, profit is 25,000. So they are going to take the commission on the 1 lakh rupees, not on the 25,000 rupees. So that is brokerage firm. And all the other activities, not only selling, other activities also they are going to do, and they are going to take the commission from the clients. And the last one, commercial banks. Commercial banks are nothing but like our traditional method of banking with that modern, okay, services they are going to provide. So this commercial bank accepting the deposit from the public, lending money to the public, that is also they are going to do, and they are going to do locker facility, credit card, debit card, checkbook. Okay, all the other facilities also they are going to provide along with this investment banking services. That is your commercial banks. So these are the five types of investment banks are there. Trade cycle of investment banking. So what is the step-by-step activities, or what is the process of trade cycle they are following in the investment banking that we will see now. So here, see, this is the flow will be there in the all the investment banking. Okay, this is the standard process. First, building the order, placing the order, monitoring execution quality, allocation to the client account, settlement with client custodians. So these are the standard five process or five steps will be involved in the investment banking. Okay. So we'll start with the first one, building the order. Okay. So for example, am the person is not knowing anything about the stock market. I have the money and I have the interest to invest my money in the securities. So on that time, I will take the help of the investment banking, correct? So if for example, I have the 1 lakh rupees cash, so I need to invest. So whatever the money is there, 1 lakh rupees, they are going to first calculate, okay, what is the number of shares is available at the market for 1 lakh rupees, how many number of shares we can purchase. So first they are going to do the pre-calculation and then they are going to do this building the order. Okay, in this building the order, they need to check, correct? If, for example, I have the 1 lakh rupees, one more person is ready to invest 10,000 rupees, one more fellow is ready to invest 5,000 rupees. So they are going to pooling the money and they need to invest on the securities, correct? So they need to do all the pre-planning in this first stage, that is the building the order. Next, placing the order. Okay, once they have done the building the order or once they done the all the prerequisites or pre-requirements, then they are going to place the order. If, for example, for my 1 lakh rupees, we can purchase 1000 shares of rupees 100 each. Okay, so 1000 into 100 rupees, 1 lakh, correct? So they are ready to, or they have the approximate estimation of 1000 shares required for my money. So according to that, they are going to place the order. Okay. So next step, once they place the order, next step, monitoring execution quality. If, for example, just have the money, they are not going to immediately, they are not going to invest. Okay. Which trade cycle of investment banking. So what is the step-by-step activities or what is the process of trade cycle they are following in the investment banking that we will see now. So here, see, this is the flow will be there in the all the investment banking. Okay, this is the standard process. First, building the order, placing the order, monitoring execution quality, allocation to the client account, settlement with client custodians. So these are the standard five process or five steps will be involved in the investment banking. Okay. So we'll start with the first one, building the order. Okay. So for example, I'm the person is not knowing anything about the stock market. I have the money and I have the interest to invest my money in the securities. So on that time, I will take the help of the investment banking, correct? So if, for example, I have the 1 lakh rupees cash, so I need to invest. So whatever the money is there, 1 lakh rupees, they are going to first calculate. Okay, what is the number of shares is available at the market for 1 lakh rupees? How many number of shares we can purchase? So first they are going to do the pre-calculation and then they are going to do this building the order. Okay, in this building the order, they need to check, correct? If, for example, I have the 1 lakh rupees, one more person is ready to invest 10,000 rupees, one more fellow is ready to invest 5,000 rupees. So they are going to pooling the money and they need to invest on the securities, correct? So they need to do all the pre-planning in this first stage, that is the building the order. Next, placing the order. Okay, once they have done the building the order or once they done the all the prerequisites or pre-requirements, then they are going to place the order. If, for example, for my 1 lakh rupees, we can purchase 1000 shares of rupees 100 each. Okay, so 1000 into 100 rupees, 1 lakh, correct? So they are ready to, or they have the approximate estimation of 1000 shares required for my money. So according to that, they are going to place the order. Okay. So next step, once they place the order, next step, monitoring execution quality. If, for example, just have the money, they are not going to immediately, they are not going to invest. Okay, whichever the company is given more returns or more profits, all those things they are going to check and then only they are going to execute the qualities or execute the whatever the orders are there. Okay, in a hurry, they are not going to execute. Okay, they will take a time and then whatever the based on the past records of that shares or securities of that organization, which are the companies issuing shares. Okay, based on that, they are going to execute all the orders. Next, allocation to client account. Okay, after purchasing 1000 shares, they need to allocate to my account, whatever the demat account I have opened. Okay, for that account, they are going to send or they are going to allocate all 1000 shares. or all 1000 debentures to my account. Okay. After that, they are going to settlement with client custodians. After all these activities will be done, they are going to take the settlement, because for the execution also, depending on the companies or depending on the institution, for demat account they are going to give the time period within 24 hours or within what is the duration they are going to provide by the banker. Okay, with that time only they are going to do the execution. So on that time they are going to collect the money and they are going to close the deal. Okay, so if you want to sell, now I have purchased the shares. Again, if I want to sell, then same process or same trade cycle will be done by the investment banking. Okay. For this, they are going to take the commission. Whatever 1 lakh rupees they have invested, for that 1 lakh rupees, they are going to take the appropriate fees or appropriate commission for the amount. Merchant banking is the one of the function of the investment banking. So we'll see what is the meaning of this merchant banking and what are the services, okay, provided by the merchant banking, and what is the difference between this investment banking and merchant banking. We'll see in this. Okay, meaning of merchant banking. So merchant bankers are a body corporate who carries on any activities of the issue management, which consist of preparing prospects and other information relating to the issue, making arrangements regarding selling, buying, or subscribing to the securities, or acting as a manager or consultant, or rendering corporate advisory service in relation to such issue management. So this merchant banker are completely, okay, specialized in the investment management activity. So in this investment management activity, all this buying, selling, making all the arrangements, okay, subscribing to the securities and other consultation services, advisory services, everything will be included in the merchant. Merchant banking is the one of the function of the investment banking. So we'll see what is the meaning of this merchant banking and what are the services, okay, provided by the merchant banking, and what is the difference between this investment banking and merchant banking. We'll see in this. Okay, meaning of merchant banking. So merchant bankers are a body corporate who carries on any activities of the issue management, which consist of preparing prospects and other information relating to the issue, making arrangements regarding selling, buying, or subscribing to the securities, or acting as a manager or consultant, or rendering corporate advisory service in relation to such issue management. So this merchant banker are completely, okay, specialized in the investment management activity. So in this investment management activity, all this buying, selling, making all the arrangements, okay, subscribing to the securities and other consultation services, advisory services, everything will be included in the merchant banking. So if you come to the investment banking, so investment banking, not only this issue management, all the other activities, okay, IPO or risk management or research or mergers and acquisition, all the activities, okay, they are specialized in all the other activities. But when it comes to merchant banking, they are the specialized in the issue management related activities. They are specialized. Okay, so we'll see what are the services are offered in the merchant banking, or services offered by the merchant banking. So first one, corporate counseling. Second one, project counseling, loan syndication, issue management, underwriting of public issue, managers, consultants or advisor to the issue, portfolio management, advisory services relating to the mergers and takeovers, offshore finance, and NR Investments. So these are the services offered by the or services provided by the merchant banking. So we'll see one by one. First one, corporate counseling. So corporate counseling covers the entire field of merchant banking activities. So whatever the all activities will be done by the merchant banking that will be covered in the corporate counseling. That is project counseling, capital restructuring, project management, public issue management, loan syndicate, working capital, fixed deposit, lease financing, acceptance, credit, etc. So these are all the functions, okay, done by the merchant banker. All these functions will be taken care in the corporate counseling functions or services. So in this only they will help all the whatever the projects counseling. Okay, if any company wants the any suggestions or any advisories on the project, okay, for that particular project they are going to advise, or for their company's capital structure, for that also they are going to advise. Project management, okay, public issue management, loan syndicate, working capital, that is day-to-day activities, the money required. Next, project counseling. So project counseling includes preparation of project reports, deciding upon the financing pattern to finance the cost of the project, and appraising project report with the financial institution or banks. Project reports are prepared to obtain government approval, get financial assistance from institutions, and plan for the public issue. The financing mix is to be decided keeping in view the rules, regulations, and norms prescribed by the government or followed by the financial institution. So in this project counseling, for example, the company have the project A, B, C. These are the three projects are available, but the company needs to take any one project, that is which is the most profitable and most feasible for that organization they need to take. So on that time, this merchant banker will gives the advisory services or consultation services for that particular organization, and in that three, which is most feasible for the organization and which is going to give the more returns to the organization, they are going to, okay, calculate, or they are going to analyze using the whatever the tools and techniques are there. With that help they are going to analyze and they are going to decide and they are going to give one project for the organization. Okay, for that they are going to take the appropriate fees for that or reasonable fees for that activity. So that is the project counseling. Next, loan syndication. So loan syndication refers to assistance rendered by merchant banks to get mainly term loans for projects. So you know what do you mean by term loans, correct? So it is a long-term loan for 10 years, 15 years or 20 years. Okay, for that period they are going to gives the term loans. Okay, 30 years, more than 10 years they are going to give the term loan. So on that time, this merchant banker will help the company, okay, and they are going to collect the or they are going to help to borrow the money from the other financial institution. That is the loan syndication. Such loans may be obtained from a single development financial institution or a syndicate or consortium. Merchant bankers help corporate clients to raise the syndicated loans from the commercial banks. Okay, so which if for example if you require 10 lakh rupees from one bank only, they are going to arrange the money, or if it is 1 crore rupees, then which are all the banks are ready to lend the money to that organization, they are going to take from the all the bankers and they are going to lend 1 crore rupees. So that is the loan syndication. Next function or next services of merchant banker is issue management. So this merchant banker are specialized in the issue management activities. In the starting of the services of merchant banker only I have told you, this merchant banker are expertized or specialized in the issue management activity. So management of issue involves marketing of corporate securities, that is equity shares, preference share, debentures, bonds, by offering them to the public. Okay, whatever the securities are there, for example, equities, preference, debenture, bonds, okay, they are going to offer or they are going to sell it to the public. Merchant bank act as intermediary whose main job is to transfer capital from those who want it to those who need it. If, for example, I have the money, so from the money from my end, they are going to transfer to the company's account. So that is the one who own it and from one who needs it money. Okay. So next, underwriting of public issue. So underwriting is nothing but these underwriters, the main job is to complete the or complete sell of all the securities or whatever the issue of securities are there, completely it is sold out. They need to assure 100% sold. That is the main job of these underwriters. So underwriting is a guarantee given by the underwriter that event of under subscription, the amount under return would be subscribed by him. It is insurance to the company which proposes to make public offer against risk of under subscription. So the companies, if for example, Wipro company is issuing a equity share means, yes, everyone are ready to invest. If for example, the new company XYZ company is started last 2 years, okay, they exist in the market, and if they're ready to issue the shares, then how many of you ready to invest your money? Correct, only few will invest their money in that company. So on that time, that institution will take the help of these underwriters, or they are going to appoint this underwriter, and these underwriters will make sure that 100% subscriptions will be happen for that securities. If not, they are going to purchase. If for example 60% of shares sold in the public or in the market, so remaining 40% will be subscribed by the underwriters or that institution. So this is the company having the guarantee of 100% shares will be sold in the market. So for that purpose, they are going to take this underwriters. Next, managers, consultant or advisor to the issue. So the managers to the issue assist in the drafting of prospects, application forms and completion of formalities under the Companies Act. Appointment of registrar for dealing with the share applications and transfer and listing of shares of the company on stock exchange. Companies or appoint one person, that is managers or consultants or advisor to that issue. Okay, the person or who is the expertise, they are going to appoint as a manager to that issue or consultant as the or the advisor to that issue. So his main responsibility is to take care of all the shares and securities or all the issue management functions in the market or in the primary market. And their main responsibility is to list the securities or whatever the XYZ company is there, that company's securities they need to list in the Security Exchange Board of India, that is SEBI. Okay, if they get the listed, then only they can do the trading in the market. So all that activities will be taken care by the person, that is expertise. Next, portfolio management. Okay, today the investor is very prudent. Every investor is interested in safety, liquidity, and profitability of his investment. So I already told you. So if I want to invest my money in any activities or in any securities means, we are going to look into these three parts only first. Safety of our funds, liquidity of our fund, and return for our fund or our investment. So for this only, this merchant banker, they are going to do the portfolio. Okay, portfolio is nothing but what are the available avenues are there. Okay, they are going to make the combination of whichever gives the more profit to the investors. Okay, like that they are going to frame the avenues. or they are going to make the combination of all the securities that we call it as portfolio, and that will be managed by the merchant banker. But investors cannot study and choose the appropriate securities. We cannot study and we cannot take the appropriate decision also. For that, they require some expertise. They need expert guidance. Merchant banker have a role to play in this regulation. So this merchant banker have the expertise. This expertise will help us to do the portfolio management for our securities. Next, advisory services relating to mergers and takeovers. So we already know the meaning of mergers, correct? So legally consolidation of two companies. Takeover is nothing but one company is going to take over the other company. So merchant bankers are the middleman in setting negotiation between the offeree and offerer. So if for example X company is the acquirer company, okay, Y company is the target company. So X company needs to acquire Y company. So on that time, this merchant banker will act as an intermediary and they are going to set the negotiation. If for example Y company will tell the net worth of that organization is 10 crore rupees, but this X company is ready to pay only 8 crore. So on that time, for this negotiation, this merchant banker will act as an intermediary and they are going to do the whatever the negotiations are there. Being a professional expert, they are apt to safeguard the interest of the shareholders in both the companies. So safeguard the interest of the company securities or shareholders. Okay, that is very, very important. So only they are going to take or they are going to adopt this merchant bankers as an intermediary. Next, offshore finance. So merchant banker helps their clients in getting the long-term foreign currency loan. Okay, not only term loans. Okay, they are helping companies to take the long-term foreign currency loans also, and joint venture in abroad. Okay, if you have the idea, someone is having the money. So that combining together, we can do the joint venture. So that is also done by the merchant banker. Foreign collaboration arrangement. All the foreign collaborations also done by this merchant banker. So that is also one of the services of the merchant banker. And the last service is NR investment, that is non-resident investment. To protect the non-resident interest in investing their money in the Indian market, that is in our domestic company shares, to fulfill the all the rules, regulations and norms for the investing is money. So the foreign people or foreign residents also, they're ready to invest their money in our Indian market. So on that time they need to complete all this process, right? So it is very difficult to complete by them. So this merchant banker will help them to invest in activities of the NR for our Indian companies securities. Difference between investment banking and merchant banking. So investment banks are the middleman between the issuer of securities and the investing public, and also provides various financial services to the clients. But merchant bank implies a banking institution that fulfill capital requirements of the companies in the form of shares ownership rather than granting loans. So in the investment banking, the merchant banking is one of the function of investment banking. Okay, so they are going to do all the other services also, but merchant banking, they are specialized only in the issue management. Okay, so capital requirement to the organizations. Next, underwriting and issuance of securities. So investment banking take the activities of underwriters and issuance, but merchant banker only deals with the international financing activities. Investment banking, fees based and fund based services they are going to take care.
Fees based nothing but how much for activity, one activity, okay, or for one transaction. They are going to take the fixed fees will be there. Fund based is nothing but for 1 lakh rupees if you are going to trade. So on that they are going to take the fund based. But merchant banker only they are going to take the or collect the money from the customers, fees based collections they are going to do. Investment bank only, okay, or majorly it provides for the large companies, but merchant banker will provides for the small companies. Investment banking rarely provides the services, okay. Merchant banker trade financing offered to the clients. Summary. So here we have the quick recap what we have learned in this session. We have seen the or we have discussed the introduction to investment management. So what is the brief introduction about the investment banking and in which year it is started, who is started. Next, the meaning and definition of investment banking. So the investment banking is nothing but it is a financial institution. It assists individual, corporation, government for raising the or for raising a long-term funds and it act as a underwriters to the all the organization. Next, functions of invest that is initial public offering, investment management, boutiques, mergers and acquisition, structuring of derivatives, merchant banking. Summary. So here we have the quick recap what we have learned in this session. We have seen the or we have discussed the introduction to investment management. So what is the brief introduction about the investment banking and in which year it is started, who is started. Next, the meaning and definition of investment banking. So the investment banking is nothing but it is a financial institution. It assists individual, corporation, government for raising the or for raising a long-term funds and it act as a underwriters to the all the organization. Next, functions of invest that is initial public offering, investment management, boutiques, mergers and acquisition, structuring of derivatives, merchant banking, research, risk management. Next, we have discussed types of investment banking that is based on function, sell side or buy side function, private or boutique investment banking, full service investment banks, brokerage firm and commercial banks. So these are the few types of investment banking we have. Trade cycle of investment banking. So building the order, placing the order, monitoring and execution, allocation to the client account and settlement with client's custodian. So this is the trade cycle of investment banking. Next, we have discussed merchant banking, meaning of merchant banking. This merchant banking only specialized in the issue management related activities. So services of merchant banking that is corporate counseling, project counseling, loan syndication, issue management, underwriting of public issue, managers, consultant or advisor to the issue, portfolio management, advisory services relating to the mergers and takeover, offshore finance and NR investment. And at the end, we have discussed about difference between the investment banks and merchant bank. Thank you.